Welcome back to your weekly dosage of confirmation bias with regards to Alibaba. Now, quickly go grab your calendar because we have the official date of Alibaba reporting its Q3 of 2022 results. So it will be on the 24th of Feb, and I look forward to the markets essentially slaughtering it again, like how they did to Facebook, PayPal, and Palantir. Anyway, in this video, I'll just be sharing some of the data sets and data points that I personally will keep a lookout for in this upcoming earnings to really ascertain and maybe appreciate some of the impending headwinds that are allegedly eroding away Alibaba's business fundamentals, like all they like to say on all the different forums. So just to quickly catch you guys up, if you have forgotten already, the backdrop in China seems relatively mundane in comparison to the rest of the world. Evergrande is probably still doing Evergrande things. Seems like no one is currently interested in probably the so-called next Lehman moment, since we have much more to worry about, like Putin for example. So not too sure what happened to the narrative with regards to the potential spillover effect and the China's economy being essentially decimated. That said though, we still have a whole host of problems on our plate. So China's economy is clearly experiencing some sort of slowdown. The Chinese government has also been rather frank and upfront about it. It seems like there is a greater degree of decoupling in terms of monetary stance between the US and China. So it can be seen via various policies such as the decreasing interest rate in China, the lowering of the bank's required reserve ratio to essentially free up more liquidity, and also the increase in government spendings to essentially stimulate the economy and so on and so forth. Of course, anything that is China related must be bad. I even see many commentaries online stating that China is currently desperately trying to resuscitate its economy due to the macro slowdown. Don't worry bro, they still have a huge propensity and bandwidth to play in the economy itself. And honestly, it's the CCP's responsibility to ponder over this problem. Why do you seem even more concerned and even more vocal about it? You're not even paid to do their job. Stop it. On a more serious note, what does this mean for Alibaba's upcoming quarterly results? So in its previous earnings call, I think there are two major headwinds that investors are most concerned about. First, like I mentioned, it's the slowing macro environment. Second would be the intensified competitive landscape. You know what else has a competitive landscape? YouTube, of course. So please don't be stingy with your like button. It's absolutely free. So please help me turn it blue now. Also, if you haven't followed me on Twitter, just a shameless plug, I posted a thread with regards to the previous earnings call back in November and opined on the concerning CMR growth. And CMR stands for Customer Management Revenue for short. So I wouldn't be highlighting the same point, so I'll be essentially operating under the assumption that you know what my initial thoughts were. So in essence, nothing changed. So for the sake of setting a basis for comparison and for us to understand how we can look at Alibaba's earnings on a much deeper level, I'll be using Zacks consensus estimate for the fiscal third quarter results. So I think historically, it is quite evident that Q3 tend to be the quote-unquote best performing quarter for e-commerce related companies especially. And you can kind of attribute it to the year-end seasons like Christmas and more importantly the 11/11 sales or Singles Day sales in China. So across the board though, e-commerce activities also seem to be the most vibrant in comparison to the last quarter. And this time around, I doubt that Alibaba will disappoint, despite the constant narration of the Chinese people feeling exceptionally poor because their property value essentially got cut into half. So we shall see though whose working theory is closer to the truth. Another thing to note, you can see that revenue growth seemed to have spiked up from Q2 to Q3 of 2021. And that was mainly due to the SunArt acquisition and then the consolidation of its financial statements. Therefore, if you were to look at the report, there are always two figures which include the total revenue segment and then another category with the exclusion of SunArt. So I think it's probably just a very personal thing and maybe I have an OCD or something because top line revenue growth can be slightly misleading. So if you were to observe the Q3 of 2021 results, 37% growth actually seems like an extremely strong result, but after the exclusion, it essentially plummeted to 27%. So in this upcoming report, we can then really appreciate the ramifications of this slowdown in growth engine, specifically to the e-commerce arm. So the current consensus for the quarter is actually pegged at $37.85 billion. Suggesting a growth of around 11.7%. So on top line growth though, I don't think there will be a huge massive deviation, but I'm optimistic that they will easily outdo this 11.7 target. That said though, given the current depressed climate, I think there is quite a huge bandwidth for Alibaba to actually surprise shareholders in this upcoming quarter. So I think one of the figures that many investors love to use when trying to predict Alibaba's upcoming earnings would be the 11/11 results. So funny thing, if you were to really compare the rate of growth of the GMV figure from the 11/11 day sale, it might not be the best indicator or essentially the best approximator. So Singles Day volume from 2018 to 2019 increased by 24.6%, but their core commerce revenue growth was at a whopping 38%. At the same time, GMV from 2019 to 2020 increased by 93%. And this huge jump is largely due to the pandemic. But the core commerce revenue growth was also at 38%. Who knows, the numbers might really be rigged. Everything is manipulated in China. Nothing surprising thus far. The consoling thing is, GMV for Singles Day is just one of the many factors that affect the overall results being realized during the quarter. Let's not forget, Singles Day is only one day in an entire period of 3 months, which is 90 days. Anyway, the GMV growth from 2020 to 2021 was actually at a modest 14%, probably because of the large base effect, which was kind of distorted by the pandemic in 2020. So will this effectively be translated into the earnings the upcoming quarter? I fundamentally believe so, but let's not forget a few key events that essentially transpired as well. So for one, regulations are alive and kicking, and I believe most of those regulations were well enforced during the last quarter of 2021. So on point number two, business practices that were monopolistic in nature was also eroded away. And this is why I also believe that the upcoming earnings call and the subsequent 2 or 3 quarters are instrumental in providing investors with the relevant data sets and data points to assess the impact of whatever that happened and transpired in the last 15 months. So the second key aspect that most people look forward to will definitely be the growth of Ali Cloud. So let's not kid ourselves. We know that the next big growth engine for Alibaba would be their cloud vertical. So as much as we would like to believe that, hey, the entire e-commerce business is cheaper than the current entire market cap, we can kind of ascertain that we are on the maturing side of the curve. But I would still like to emphasize that there are still strong tailwinds for e-commerce in China, especially for the industry's ability to grow in tandem or even at an accelerating speed compared to the growth of China's purchasing power by and large. So back to Ali Cloud, I think the consensus would be that they continue growing at a clip of 30% give or take. So I think the huge slowdown in comparison to 2020's results, which was that Ali Cloud was growing more than 50%, was largely due to the appreciation of the differences in TAM, which is total addressable market, and the idiosyncrasies of the customer base. I think anywhere above 35% would be considerably good results on a relative basis, but it should fall in line between 30 to 35%, and that's usually what happens, right? Analysts would have their own consensus, and then you would have your own approximation, and the results always tend to lie in between. So the last part that I'm most interested to find out would be the progress of the key strategic investments. I think in the previous earnings call, there were actually a few questions pertaining to their strategic investments and how essentially the management team is trying to track the development and the growth of all these key strategic pillars. So in the last report, I was actually pleasantly surprised when they reported an 82% increase in orders on a year-on-year basis for Lazada, which is their international commerce arm. So I think people that are staying in Singapore, even in Malaysia, thought that Lazada was a done deal. But it seems like they are not slowing down in their regional growth, especially in the Southeast Asia region. So furthermore, I want to get more insights with regards to verticals such as Tao Cai Cai and Taobao Deals, which are essentially their answer to the competition and the entire competitive landscape, who are namely Pinduoduo and TikTok in this instance. So these updated metrics will allow us to appreciate the rate of adoption and how these other platforms are positioned to act as a strong alternative to the competitors. So all in all, I'm not going to tell you that, hey, on Thursday, Alibaba will definitely moon and gap up by 20%. I don't get paid to hype up stocks. So I've been on this platform for quite some time now. I don't just easily move on just because this current stock I'm talking about is not popular or not sexy. So as long as my fundamental theses don't change, I'm just going to be that boring old dude on YouTube that people think is going crazy investing in China's securities. So with that, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!